Hello and welcome to Trading Hour live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Hormuz Fatakia. Good morning, Hormuz. Second day running, we are seeing opening gains that have come by. 110 points higher on the Nifty as we speak. Mid-caps are outperforming as well. 0.6% higher there. And across the board, if we talk about sectoral movers, all of them are in the green today. So yes, some of them are outperforming, but all of them in the green right now. Specific stocks that we'll speak about in greater detail later as well. But Sugar Pack that continues to soar higher, and that is one story that we'll discuss in greater detail through the course of the show as well, later in the show actually. So Sri Renuka, Dwarike Sugar, Dhampur Sugar, all these stocks are higher in trade as we speak. But if we talk about what's happening in the Nifty pack, some of these power stocks are doing well. We have the CPSE index, which is one of the biggest gainer as well. Reliance Industries higher 2%. We'll discuss why. We do have Nestle India, which is higher in trade by 2% as well. And on the losing side, we have some of these auto names. M&M is lower, Maruti Suzuki is lower. But do remember, the auto sector has outperformed so far in the week gone by as well. But let's get stock specific now, because Hormuz has gone across to the big wall. He will put spotlight on top movers in the market. Hormuz, tell us more.
The broader markets are outperforming indeed. And as you mentioned, the big story of the day is sugar stocks. Of course, we'll get onto the news and the fundamentals behind it in just a bit. But take a look at the volumes already in just the first hour and 3/4 of today's trading session. And I listed these stocks out because these are the ones that are seeing double-digit gains. At least these are the ones with high volumes. Look at Sri Renuka, 6.5 crore shares traded, 20-day average of just 7.5 lakh. Dwarikesh, Dhampur, Bajaj Hindustan has had 4.5 crore shares traded. The 20-day average is just 20 lakh shares. It will be interesting to see what kind of delivery volume emerges from these. But for now, all of these sugar names gaining at least in double digits on very, very strong volumes. The other one that has been moving over the last few days has been Samman Capital. And ever since the stock has entered the F&O segment from the start of the September series, the stock has been on an upward move, 7.5% today as well, almost 15% now in 3 trading sessions, and it has had more than 1 crore plus shares traded every single day since it began trading as an F&O stock. Even in today's session, we've already had in excess of 2 crore shares changing hands in the first couple of hours of the trading session compared to a 20-day average of 35 lakh shares. And courtesy of this up move, the stock has now broken above its 200-day moving average, which stands at around 131.90. But despite this move though, stock has been an underperformer, still down 12% for this year, and has had negative returns in 5 out of the last 6 calendar years. And the last one on the list is Avanti Feeds. And of course, this has been in the news for all the tariff-related announcements and so on. The stock has alternated between gains and losses for the last 6 sessions. But in today's session, this 10% move is coming on the back of almost close to 10 lakh shares now being traded compared to a 20-day average of around 1.5 lakh. And the stock is still trading below its 50-day moving average, which is closing in on right now. The next important level to watch on the upside is 695, which is the 50-day moving average.
All right. Some interesting names there in data as well. Thank you so much, Hormuz, for telling us all those names. But, we spoke about how Nifty is edging higher, and a lot of it is courtesy Reliance as well. We did see those updates come by in the AGM, and we do have a note which has come in from Morgan Stanley today. They have a view that AI will redefine Reliance Industries' equity story from here on. The stock is higher by 2%. They say it is the largest beneficiary of China's anti-evolution focus across energy and solar supply chains as well. Now, remember, they had spoken about their targets, specific targets in the new energy business, and that is something which the streets seem to like as well. They say Reliance self-anti-evolution in consumer retail and telecom is also bearing fruits. They gave targets in terms of how they want to be one of the biggest FMCG companies in the country as well. Overall, this adds $20 billion in NAV and also 17% to FY28 EPS. This is something they are very positive on. They raised new energy NAV estimates by 20% to $25 billion by FY27. This largely because in their AGM, they gave a lot of targets, specifically with new energy, when the next set of capacity addition would come by, and specific targets overall for the EBITDA as well.
contributing almost 30 points to the index upside is Reliance Industries. So 2% higher on the stock, 1380 is where the index big boy is. But Sonal, you also have something on Phoenix Mills. That's another stock that's doing well today after the upgrade from Motilal Oswal.
Oh yes, there's an upgrade that has come by and it is upgraded to a buy. The target is 2044 on the stock. The stock is higher by 3%. The brokerage says that the company continues to diversify and expand their portfolio. They are on an adding spree when it comes to new malls as well. So they remain optimistic about the long-term performance. The growth will be driven beyond FY27 for the company. They estimate a 20% CAGR in their retail income over the next 2 financial years, which will reach 2,800 crore rupees by FY27. Their office portfolio is expected to surge by 3 times. So they have hospitality, office and retail portfolio. All 3 of them will see growth according to Motilal Oswal. The company also acquired an 11-acre land parcel in Thane. This will help their hotel segment because it will triple their hospitality portfolio to over 1,800 keys from the current levels. The company is also acquiring remaining 49% stake in Island Star Mall Developers, which was a JV with Canadian Pension Fund. And they say this is an EPS accretive transaction that the company has undertaken. It will strengthen their high-quality retail asset portfolio and add to the earnings as well. So all the portfolio is expected to do well because they are on a capex spree. They will be adding a lot more portfolio, which will aid their earnings as well.
Indeed, upgrade coming in from Motilal Oswal, projecting a 35% upside from yesterday's closing level. So 1562 on Phoenix Mills, still, well, quite a distance away from its 52-week high, which is around 1968. So still, 2044 price target coming in from Motilal Oswal on Phoenix Mills, 3% higher on the stock. Take a short break. On the other side, we put the spotlight on the crypto markets. Lily Liu from Solana Foundation joins in on the other side. Welcome back. 24,740 is where the index stands, comfortably above the 20-day moving average as well as the 100-day moving average now on the index. And a part of this up move that we have seen over the last couple of days also comes from India's GDP print, which came in on Friday after market closing hours. That's scorching 7.8% figure, which raised some issues around the deflator. But the NSO sources have told CNBC TV 18 that worries of a low deflator are overstated. Now, this comes the day after many economists and media reports said that India's higher than expected GDP figure of 7.8 compared to estimates of 6.8 may have been because of the deflation method. Lata is here to break this down for us. Lata.
Well, I spoke in detail to several top sources in the National Statistical Organization, the NSO, and they say that their calculation method is not at all incorrect, and in fact it is endorsed by the IMF year after year. It's among as good as anywhere. Now let us address the worry itself, which is what I asked them. The analysts' worry is that India's Q1 real GDP is at 7.8 and nominal GDP is 8.8. Normally the nominal GDP is real GDP plus inflation. So this gives a very low inflation or deflator of just 0.9%. This is the worry. Now, NSO sources first said that, it is not as if we collect all the goods and, value addition of all goods and services at the nominal rate and then deflate it. That is not the way it is done, which seems to be the misunderstanding. They say for a large number of the products, like at least 50-55%, for instance, agriculture, mining, electricity, the consumer durables, they have the volume of goods. Just like last year, this year, you have amount of crops produced, amount of electricity generated. So it is at constant. The value added is a constant. And to that, you add the CPI or the WPI, more likely, and get the nominal GDP. So it's not as if you're deflating it from the current prices. You have the constant volume produced. That is in the case of public sector mining and all those. Where is it that you get the current prices, nominal GDP, and then deflate it? These are the sectors. Private mining. Private sector mining, you take it from BSE NSE data and then deflate it. Then likewise manufacturing. Manufacturing companies also, you take BSE NSE data and corporate. That's basically corporate data and deflate. Trade, retail trade, again you have to go with the company data. Real estate, you go with the corporate data. Finance, like, RBI releases deposits, credit data. Public administration, you have what the CAG releases, or the Ministry of Finance, revenue data, services tax data. And even health, education, what you do is you take services, the service tax paid on education, on health, and then you deflate it. So there, how are you deflating it? WPI or CPI? That becomes an issue. And so, there is no wholesale price for education and health. You have to take the WPI, which is a manufacturing-based WPI. So, there can be an argument, but what is the option? Some of the countries use PPI data, that is Producer Price Index. What is the Producer Price Index? It is different from WPI in the sense, it is the price at which the producer is getting the inputs. There, the transport, logistics, warehousing is already included. So some of the services is accounted for. In India, we don't have that PPI data. So you may argue with that manufacturing, with some of the inputs as not being deflated adequately. Likewise, there is double deflation applied in some countries. For instance, in manufacturing, they deflate the input prices, output prices separately, and then get the value added. In India, the NSO only deflates the output prices. So there is an argument that if the input prices are very low, you're probably overstating manufacturing. Many economists have said that about the Q1 GDP. So, it is only for about 45% of the inputs that this argument of deflating from current prices comes. It doesn't come for a larger part, about 55% of the data, NSO sources told me. And they also saying that February 2026, the revamped GDP, revised GDP is going to come in. There, they're going to address the PPI issue. They're also going to address the double deflation issue, which in any case, they're saying in many countries, it's not as if they do double deflation of all the companies. They do of a sample companies and extrapolate. So they're going to do that as well. Also, the CPI basket is going to be recast to have more services. The current basket was designed in 2012, when the average Indian household didn't consume so many services. It largely consumed food. Now people are better off. We are consuming services. So the CPI basket from 199 service items is going to have 400 service items. And therefore, a much better CPI basket is in the works. The issues are minor, are smaller for a small part of the GDP. And therefore, we should not cast too many aspersions on the GDP data.
Well, that's a lot of clarification on GDP coming in. But moving gears then, what we are going to talk about now is the Crypto Corner. And we are joined by Lily Liu, who's president of Solana Foundation. Lily, hi, thank you so much for joining in. And I want to start with GDP as well, but this time around with the US GDP, which has started to be published on blockchain now. It continues to be published in other ways, but now on blockchain. So while we have seen this being happen, that blockchain is made use of by various government agencies to start putting in their data. But would you see this as a big step when the US GDP starts coming in on blockchain?
I think this is just one more step in the future that we've seen for quite a while, which is where a whole range of financial assets and also data are going to be natively on chain. And why is that important? Why is that helpful? It's because what blockchains do is they make money into data, data into money, and they also create the shared global financial infrastructure that anyone on the internet can access. That's been the value proposition of blockchain from the very beginning, this idea that you have shared financial rails that 5.5 billion people can access. That also means that the liquidity of 5.5 billion people can all be realized in the same infrastructure in the same way that we do with content today. So it's one more thing. There's so many things going on as people, as financial markets and people around the world really understand the power of this technology as financial infrastructure, and this is just one of the latest things.
Oh, well, absolutely. Lily, how would you also look at the way stable coins really seem to be working in right now? Of course, markets are awaiting that we see more regulations going forth. Would you say it seems quite divided right now because stable coins laws, and then we're looking at a lot of stuff happening with Bitcoin in sense of reserves, etc. And then there are altcoins. Too many rules, regulations, and form?
There are many different cryptocurrency assets, but I think one way to break it down pretty simply is that there's blockchain, which is technology that can be used in two major ways. One is blockchain as an asset, and that's Bitcoin. Now, a lot of people are familiar with the idea that Bitcoin, digital gold, store of value, there's only 21 million of them. And that has really taken the world by storm over the last couple of years. So there's blockchain as an asset itself. And then there's blockchain where this technology is financial infrastructure upon which you can create stablecoins, create all sorts of different cryptocurrency tokens that have their own use cases and their own roles. And so there's quite simply, there's Bitcoin as the asset, and then there's Solana, which is going to be global financial infrastructure. And so when we talk about this whole world of crypto, and everyone's heard of one coin or another, those are the two easy ways to break it down. Is this coin going to be a long-term asset? Or is this coin really, the core purpose of it is to be used as financial infrastructure around the world?
You can't separate the two clearly. But Lily, since you spoke about Solana and that is what you're heading, what is it that we can expect from Solana Foundation going forward? I mean, I do understand that there have been a lot of scaling up. There are a couple of ETFs already in works, and US is we are awaiting the US clearing it too. So what really can be expected for the rest of 2025 from Solana?
Sure. Well, Solana, the protocol, is always open source tech, and it is being used by thousands of developers around the world and tens of millions of users around the world. Solana is the most used blockchain, more transactions every day than all of the rest of blockchains combined, and then times two. So we're going to continue trying to build the best technology, the best infrastructure to power financial markets. To sort of bring the future of the future of capital markets onto the internet. That's why we always talk about internet capital markets. So some of the things that we're really focused on is certainly stable coins. Why is that helpful? Why is that important? Why should people care? Well, because in the age of the internet, we're so used to things moving instantly around the globe. And that's one way you can do that natively with stablecoins, to actually have really efficient 24/7 internet scale and speed and availability money movement. So that's a really obvious one that I think is now really top of mind for people. And then beyond that, what we started to see is putting real world assets, different funds, for example, money market funds, on chain. And that trend, I think, is really only going to accelerate as people understand that if you take these assets, put them on chain, then what you have is you have taken these assets and enabled the possibility to distribute them to, at the maximum, all of the people on the internet, 5.5 billion people on the internet, and there's no distribution for capital markets, which is ever going to be larger than that market.
Oh, well, absolutely. How are you looking at the adoption numbers as well? Because, there are some countries which are way ahead when it comes to crypto and blockchain adoption, and there are some which are still struggling with their rules, regulations, even taxes for that matter. And I can add India to that list too. Yeah,
certainly. Well, blockchain lives natively on the internet, and that means it is available in every country equally at the same time, and it is up to those countries to think about, understand, and have a strategy as to how they want to incorporate that, the future of digital finance, into their economies or not. And what we've seen is blockchain over the last 15, 16 years that it's been in existence is something that moves very fluidly throughout the world. And for example, in a very short time, the UAE here has become a global leader, one of the two global hubs of the blockchain industry, and was able to do that very quickly. So it's true that amongst the various countries and governments, there's many, many different regulations, but I think there are a few that understand this is about financial innovation, digital innovation for the future, and really see that as an opportunity.
Lily, would you say that the markets really seem consolidating right now after that 15, 16 years since it has been around? There is some consolidation, more credibility. There are more better rules, regulations being put out. Institutions, family houses, banks, brokerage is also talking about it now.
Absolutely. I think there's been a tidal wave of institutional interest coming into this industry, in particular over the last couple of years, as I think the use cases have been developed and have been scalable around payments. And people see very clearly that this really is a better way of moving money around the world. Now, there's still work to be done, the underlying infrastructure, on and off ramping, various institutional integrations for sure. But people now see this is, let's say, email versus sending snail mail. And the value proposition of that is just so clear, night and day for people. And then also similarly, bringing tokenized assets on chain, that is also something where the value proposition of that is just so clear. For example, watching analog TV versus being able to stream on the internet. So the value of this is self-evident to so many people that have started to pay attention. And also as the user experience infrastructure has also matured over time, which has also been a necessary part of it.
Oh, well, absolutely. It's quite evidently and mostly, put out as an example that you can send pictures from Asia to Europe faster than you can do with money. But if the blockchain is adopted stronger and faster, we perhaps would be breaking that too. Lily, thank you so much for joining us here at CNBC TV 18. Appreciate your time. And with that, we'll go for a short break, come back with more news and updates on the other side.
CNBC TV 18 presents Crypto Corner, powered by Coin TCX.
Welcome back. You're still tuned into Trading Hour. Let's get our first corporate conversation from the sidelines of the 21st Motilal Oswal Annual Global Investor Conference. We are now joined by Jairam Sridharan, who is the MD and CEO, Retail Lending and Piramal Enterprises. Jairam, good morning. Thank you so much for joining in and patiently waiting by as well. The big talking points that we want to be discussing with you is, will AUM growth pick up pace from here? Is drag from legacy portfolio fading away? And the asset quality trends in car loans and MSE improving or not? And of course, the big story that we have been tracking, and that's the possible GST cuts that would come by as well. So, Jairam, I would like to start with that first up. If there will be some impact on credit growth, because sales are now getting postponed till the time some clarity comes in. So, will there be an impact on credit growth? And if the cuts do come by, what kind of macro impact will you see on consumption and rates overall?
Yeah, good morning. Thanks for having me. Your point is right that so far the GST announcement has had a negative effect on credit growth and on growth of the underlying products, because everybody's waiting for clarity to emerge on which products are going to be in which category. One hears that there might be something coming up later this week when the GST committees meet. So let's see what happens there. But so far in cars, for sure, you're seeing people postponing purchases, and in multiple other categories where people have a feeling that a boost might come in the form of a lower GST. Postponement of purchases is very much happening, and so far impact has been negative. Now there will be all this negative will go away, and kind of a revenge buy situation will happen the moment the final announcements come in. But on the net, will it result in a sustainable increase in and a steady increase in overall demand? One hopes so. I would hope for a 10% kicker in overall demand for these products if GST does indeed go in the direction that people are expecting it to. But let's wait and see. So far, it's been a bit of kind of waiting for the bride, unfortunately.
Indeed, Jairam, good morning. Thank you for joining in. One of the major segments, of course, with regards to this GST has been the automobile segment. And in your earnings call prior, you highlighted that vehicle loans and MSMEs, there is a bit of stress that you're witnessing. And both of these segments, correct me if I'm wrong, is almost a third of your book. What are the trends that you are currently witnessing right now on ground, now that we are almost 2/3 of the way into the second quarter as well? Do you see those concerns rising, and as a result of which the GST impact may come in later on, but for now, for the second quarter, do you see credit costs going higher for you as a company?
Right. Let me start with this last part and then I'll pivot to the others. No, we don't expect to see that. Credit costs are holding on pretty steady. I don't think there's going to be any noticeable delta in the unfavorable direction. I think we are largely okay. The point you made about car loans kind of having a negative risk impact in the first quarter is absolutely right. After about, I want to say 12 quarters of being in the 90 to 100 basis points range, 90-day delinquencies in car loans shot up to 130 basis points in the first quarter, which surprised us a little bit. And we called that out in our earnings call, and we said that, hey, there's something going on in the car loan segment, which at the moment we're not fully understanding, but it looks like risk has gone up a little bit, right? However, things have not gotten any worse from there. Things have been kind of steady at that level. So I don't expect to see any deterioration. We are 2 months into the quarter. Doesn't look like a lot has changed on that front. Between car loans and MSME. And by the way, when we talk about MSME and kind of risk issues in MSME, that's all in the MSME unsecured space. The secured MSME space or the lab space has actually been quite good. There has actually not been any risk deterioration there at all. So between MSME unsecured and car loans, we have about 12% of our book. Yes, we have seen risk deterioration in car loans last quarter. MSME risk deterioration was more concentrated in the previous year, but it has stayed at those high levels, has not actually gotten better since then. So those are two segments we continue to watch closely. Neither of those two segments has worsened from quarter one levels, but neither have they improved. So I would say about both of them that they are steady at relatively high levels of risk.
Okay, so we are in the wait and watch when it comes to these two segments. Jairam, I wanted to understand what the cost of funding environment has been like. Since we are in a rate cut environment, there is possibility of more. What's your take here?
So the rate cuts have shown more life and more pass through in the capital markets. So if you're trying to look at the debt capital markets, the rupee bond market, for example, we have been able to raise money at about 45 basis points lower than what we were doing at the same time last year, right? So that's the level of transmission we have seen in the bonds market. However, in the loan market, we are actually not seeing that much transmission yet. Very few banks, if any, have cut their MCLRs, and those that have cut have probably cut by like 10 basis points or so. So I'd say on average, we are seeing maybe a reduction of 5 to 10 basis points in the loan market, but about 40-45 basis points in the bond market.
Jairam, the other bit about the company has been your merger with Piramal Finance. So what we get to understand is that you're still awaiting merger approval from the NCLT. And based on what you have mentioned earlier, it's supposed to be completed by the third quarter of FY26. Are you on track for that? And once that happens, how much of that do you see benefiting from the merger in terms of your balance sheet?
Right. So yes, we are on track. The NCLT order has been reserved for judgment, which essentially means that they just need to read out the order now, which could happen over the next 10 days or so, or it could be a little bit more than that. But we are talking days now rather than weeks or months. So once we get the approval, and then we will file with the ROC for merger, and effectively our merger will be completed. And once the merger gets completed, our listed stock today, which is Piramal Enterprises, will be delisted for a period of about 45 days, and Piramal Finance, which is the bottom co, our shares will get listed as Piramal Finance at roughly 45 days after that. So that's broadly what to expect from here. It should result in much simpler company structure for investors to understand, one balance sheet for both lenders and equity investors to look at. But fundamentally, from an economic standpoint, nothing should really change. Our economic fundamentals remain exactly the same pre and post the merger.
Take that point. Jairam, last question before we let you go. You know, we did see that reversal of risk-weighted lending that we saw coming in from banks to NBFCs, but still banks are cautious in lending to NBFCs. Can you explain what's happening here and why it hasn't picked up meaningfully the way it was expected to?
Yeah, you know, it has picked up a little bit. Like, I wouldn't say that it hasn't picked up at all, particularly with public sector banks. Things have picked up, and the appetite of the banks towards NBFC lending have indeed changed. With some of the other parts of the banking sector, there have been a few other challenges. Like there have been a credit to deposit ratio challenge outside of the public banking sector, which has actually weighed heavily, and that hasn't changed. Even as the NBFC sector weightage has moved, the CDRs haven't necessarily come into more happy territory for some of the other banks. So there, we need to see more deposit growth before you start seeing some of this credit growth to happen.
Thank you very much, Jairam, for sparing time and joining us today on the sidelines of the Motilal Oswal Annual Investor Conference. Wish you good luck for the rest of the year as well. The management of Piramal Enterprises on the awaited merger with Piramal Finance, the impact on the company, and of course, what goes ahead for the business. But the big story of the day that we've been tracking since the morning has been the surge that we are seeing in all of these sugar names. And Rhea is here to tell us why are these sugar stocks having a very sweet day today, Rhea?
Well, yes, the reason that all of these sugar stocks are surging in trade today is that there has been a very significant relief for the sugar industry as a whole. India has removed all curbs on ethanol production from sugarcane juice and syrup and from B-heavy and C-heavy molasses for sugar mills and distilleries in the sugar season 2025 to 26. And the government is going to periodically review the diversion of sugar for ethanol production to maintain the availability of sugar for domestic consumption. Now, remember, these restrictions were earlier imposed in December of 2023 due to the rising sugar prices. And now sugar mills will be able to use the inventory that is lying with them of B-heavy molasses. So that is a big positive for all of these companies. This will also help achieve the target of boosting the proportion of the fuel in gasoline blends to 20%, the target that has been set by the government. And also in a separate government notification, distilleries are now allowed to purchase up to 2.3 million metric tons of rice from the FCI for ethanol production, and this is going to help enhance ethanol production from dual feed distilleries.
All right, so that's a big news for the sugar industry overall. But let's talk about the stock performance now, Ria. How have they performed? What are the valuations looking like across the board?
Well, yes, just before we come to the stock performance, let's also take a look at the impact on some of these key companies in terms of the contribution from ethanol to the overall revenue contribution. It stands at about 30 to 37% for these key companies. And for profit contribution, it stands at about 43% for Triveni Engineering and for Dalmia Bharat Sugar on the EBIT level. For Balrampur Chini, it is the highest at 63%. Now, coming to the valuations and the stock performance, for some of these key companies, most of them, Balram Chini, Triveni Engineering and EID Parry currently trade above their 3-year average Ps, and Dalmia Bharat Sugar is slightly below its 3-year average. The rest are trading around 17 to 22 times PE. And lastly, in terms of the stock performance, most of these stocks are down anywhere between 3 to 45% over the last 1 year, and EID Parry has been the outperformer, up around 37% over the last 1 year.
Still trading above their 3-year averages despite the decline from their recent highs. Ria, thank you for that. Now, earlier we did speak to Deepak Balani, who is the DG at the Indian Sugar and Bioenergy Manufacturers Association, and Atul Chaturvedi, who is the Executive Chairman at Sri Renuka Sugars, on the potential impact of this move. Listening to what they had to say.
There's no reason why diversion of sugar to ethanol, which current year is about 3.2 million tons, should not go up to anywhere between 4.5 to 5 million tons. And the sugar industry is quite capable of supplying to the government. The only request from the industry is that for far too long, we have been denied a price increase, and there's no reason why from maize they continue to buy at around 72 rupees, closer to that, and from cane juice at around 65. So there's no fear as far as sugar inflation is concerned.
All right, that's the big story that we're tracking. But for now, we'll take a short break. Up next, we'll discuss the market fundamentals with Anirudh Garg from Inva Asset PMS.
Welcome back. Still 110 points higher on the index. Good time to get in a quick chart check as well. Sneha Seth from Angel One is joining in. Sneha, good morning. Thank you for joining in. Well, yesterday's move was attributed to a technical bounce, but now that we are above a 20-day and the 100 DMA, do you see this as a sustainable trend back towards that 25,000 mark? What's your call on the index and your stock calls as well for the morning?
So very good morning. If you see the index, specifically from yesterday, we have seen a very strong up move, and today's follow-up buying is an interesting thing. However, if you look at the banking index, it has not been performing, and any participation from this space would be very interesting. So I believe for Nifty, if you look at the options activity as well for today, 24,750, 24,800 is the resistance zone, and we are seeing decent pile up in today's session. So any move above this would be very interesting. And in case of banking index, I believe any buying interest coming in and banking index heading above the gap zone, which is created around 54,400, 500 zone, that would be a very positive development. So one should be keeping an eye on banking space as well, and the levels which I mentioned. Overall, the chart structure looks good. Now, if you look at the individual counters, I have a 2 buy call. First one is on Ashok Leyland. If you see, the chart structure is very strong. The counter has been forming higher top, higher bottom structure. And I believe the counter is poised for a move above the resistance zone, which is placed around 134, 133 zone. So I would suggest buying this counter with a stop around 128, and the target expected will be around 137. Apart from this, I believe the next counter which I'm liking is Dabur. Here, if you see the chart structure, the counter has given nearly 4% move in today's session. The counter had a very strong resistance placed around 535, 537 zone, and this zone should be acting as a support for now. So keeping a stop around 535, it's a buy, and the target expected will be around 565.
Okay, all right, Sneha, thank you so much for joining in with those levels to watch out for on the markets and individual names as well. From technical, let's go to the fundamentals of the market. Anirudh Garg from Inva Asset PMS joins us now to discuss market fundamentals. Anirudh, good morning. Thank you so much for joining in. I wanted to quickly ask you and get direct to any specific names that you're liking in the market right now. Is it a top-down approach that you're following, or is it very specific to particular companies?
Hi, thank you for having me. Unfortunately, I won't be able to share names, but let's discuss about the sectors and the overall theme of the market, if you permit me. So I think we at Invasset are very, very clear that we are in a structural bull market. And all these chaos and confusion which have been created in the last 1.5 months post the Trump tariff of plus 25% kicking in, I think these are the things where market, particularly bull markets, they form their basis. I believe that if we see history, all the bull markets that have been there have arisen, were born out of chaos and confusion. And the more the chaos and confusion, the better it is. And I think that is a classic case right now. So first of all, we believe at Invasset that markets, our technical desk says that, and we believe that 26,300, which is the all-time high of the Nifty, we should bypass it, not even only retest it in the next 2 to 3 months. When it comes to sectors, okay, so we believe that the last run, the leaders of the last run, particularly Capex and PSUs, should not be the leaders of this run. Saying that, in Capex, we believe all those, and among PSUs as well, all those companies which are fundamentally very, very strong are doing something which is very, very essential for the nation, for which Capex cannot stop. They will continue striving upwards. All these sectors like defense, railways, infrastructure, power, they don't end overnight. It's just that the euphoria ends and the companies which are stronger will continue to do well. Apart from that, maybe I'm answering all your questions in one go, but it's just a flow going on. So apart from that, we also believe that the two biggest relative changes out there are the tax cuts that have been there, the GST cut and the income tax cut. A lot of income has come to the hands of the people. And when you have income, it's generally consumption plus savings. So any person, any company who can extract either through consumption or through savings I think this should be the sector where the leaders for the next bull run should come from.
Quite a lot of insight there, Anirudh. But, the flavor of today has been sugar. And it's not something that gets spoken about as it used to be a couple of years back when sugar was set to be a theme. But now with these latest restrictions that have been lifted, the sugar stocks getting a bit of a lift. Do you see this as a tactical play, or you may just want to avoid it and saying that this might just be end up being a one-off because it might just not end up shifting the fundamentals too much on ground and look for other opportunities in the market?
I think the biggest trigger for sugar, as the gentleman from Sri Renuka Sugar was saying, that India has its inflation under control now. So the long due hike, which is required, actually very, very essential for sugar, can now come through. And the government will also be more comfortable in giving it now. So we believe that sugar companies from here should do well. Uh, will they be the leaders for the next run? That is what we hope for when we invest. I don't think so, because they're cyclical companies. They are as much as a commodity as you can get, and you have the only way to play commodities is you track their inventories, you track how the inventories are being depleted. We are seeing the diversion towards ethanol. So fundamentally things are not bad for sugar from here. But when you have to play them, you have to be very, very cautious, because there's a lot of volatility. The beta is very, very high. So you have to keep your stop losses. You have to make sure that you run them technically once you know that the fundamentals are in place. So if we go for sugar anytime in the future, we don't hold sugar right now. But if we see that there are breakouts happening in sugar, or we see some fundamental policy change coming, then surely we will play them, but only and only with a technical understanding, and not for a long term horizon, not a very long term horizon.
Oh, that goes for all the commodity names, right? But Anirudh, right now, if there is any commodity-driven sector that you're looking at, which you think could do well technically, of course, you won't give technical answers there, but fundamentally, you think this could be the time for that particular space. So which one would that be?
Okay, so I feel especially for chemicals, specialty chemicals, what had happened in specialty chemicals was that a lot of capacity was set up till 2021. Post that, as China also relaxed its rules, there was a slump in chemical prices, and now we are again seeing that all over the world the chemical prices have started going up. The use of chemicals over the years have increased, is what we have seen. So now we believe that especially specialty chemicals is a space where you should not be bearish. I think the worst period for specialty chemicals is over. Also, I believe that one of the biggest fundamental changes that has happened in the markets is the distrust, a global distrust that has happened post the election of
We seem to have.
before. Now I can rely on anything for a company which is not a very essential to me. But for things which are very, very essential, I have to make sure that I build capacities and I support my producers. So somewhere I believe that the fertilizer space should also be in focus going forward.
Indeed. Anirudh, there has been a lot of talk about electric mobility. Actually, before we get to that, the last couple of days or the last couple of weeks, we've seen a common theme. A lot of these bombed out names have done really well from lower levels. Paytm was a case in point from last year onwards, from levels of around 300 at the start of 2024. The stock is now 1200 plus. Even for names like Ola, from sub 40 levels, the stock has now gone up to 60. Even for MobiKwik now, of course, it's down almost 65% from its post-listing high. For people who wanted to accumulate such names at lower levels, is this still a bet that you would want to take, or you would want to move on to other ideas?
I think there's a huge potential in these companies. See, they are wonderful companies. Getting an app downloaded and then is a very big thing. We have tried it in our company, but overall, all these companies, they are wonderful, wonderful businesses. They have an ability to scale. They have very, very good managements. Whatever the euphoria was has been, taken down from the few years. Yeah, they have run up a bit, and I think they are contenders of buying on dips for sure.
All right, take that point. Thank you so much for joining in. With that, we'll slip into a break. When we come back, we'll put spotlight on one of the stocks which is under the lens, BGR Energy Systems, in our new segment, Under the Lens.
Welcome back. It's 24,730 on the index, 100 points higher. Still holding on to those levels of around about that 100-day moving average, as Neha said, was also just highlighting in the previous segment that 24,750 to 24,800 band is the one that is that resistance zone for the index. A couple of movers that have sprung up in the last few minutes. Greaves Cotton is one of them. And now the stock is up 12% as we speak. At last check, the stock was up 7.5. So a double-digit advance for Greaves Cotton. Take a look at the move that you've seen post 10 o'clock on that stock. So 12% higher on Greaves Cotton. The other one is Genesis International, and that too trading gains of around 7%. Another one that has seen a sharp spike in the last few minutes of the trading session. Take a short break. Back on the other side in just a bit. Welcome back onto our special segment Under the Lens. Sonal has hopped over to the wall to talk about a stock on her radar, and that is BGR Energy. Sonal.
Thank you so much for that. Yes, the stock under the lens today is BGR Energy Systems, a stock that's been on a remarkable rally. Shares have jumped nearly 85.5% in last 1 month. But behind that surge lies a company weighed down by weak financials and mounting debt. BGR Energy, it is in the business of supplying systems and equipment as well as turnkey projects or engineering projects contracting. But the operating environment for the company has been far from smooth. On 23rd July, the Tamil Nadu Power Generation Corporation terminated a contract worth 2,600 crore rupees, a major blow for BGR Energy. Now let's break down the financial. That's where the real picture is. Revenues have been on a steady decline, falling from 1,221 crores in FY22 to 1,012 crores that we saw in FY24, and further down, slipping to 452 crores in FY25 and only 89 crores in the first quarter. Profitability paints an even starker picture. EBITDA, which was a positive 130 crore rupees in FY22, has since then turned negative into heavy losses, 270 crores in FY23, 325 crores in FY24, and 566 crores of EBITDA loss in FY25, and in the first quarter at 105 crore rupees. The bottom line has also worsened from a net loss of 178 crores in FY22, ballooning to 981 crores in FY25, and a fresh 266 crore loss in Q1 of FY26. On the balance sheet side, the stress is evident. As of June 2025, cash credit outstanding from banks is around 3,800 crore rupees, and with that, the defaults alone are 3,700 crore rupees. Total borrowings in the company is at around 4,247 crore rupees, while operating cash flows remain deeply negative at 1,857 crores. The company auditors have also issued a cautionary note. They say, and I quote, this is as per their report, "The assumption of the company as a going concern made by the management continues to be inappropriate." And finally, looking at ownership, where promoters hold 51% of the company, but nearly 59% of that holding has been pledged, signaling further concerns for investors. So we thought we'll put a spotlight because the stock has seen a massive surge in last 1 month.
Surge, but with conditions apply and with concerns as well. Sonal, thank you for that spotlight with that under the lens on BGR Energy. With that, we call time on this edition of Trading Hour. From Sonal and me, thank you for watching. Halftime report on the other side.